Welcome to my YouTube channel. Today I'm going to talk about VIX index. I'll explain what the VIX index is and how you should look at VIX index, how you can make a reference out of it, and what exactly volatility or the upswing in the VIX index means for us. Normally, what has happened in the past election, let's say last 5 elections, during election time, and what was the return of Nifty? Because all these will give us idea about whether to stay in the market, book partial profit, or stay away from the market. So let's move forward and come to this. Before I move forward, I would like to make a request. If you have not subscribed to this channel, please do subscribe to the channel and don't forget liking the video, because your likes are very, very important and it will go in a long way in really increasing the reach of this channel. So today, talking about the VIX. VIX is also known as volatility index. In fact, it's a very old concept in Western country, but Indian market got introduced in 2008, and since then there have been a couple of ups and downs, like 2008 itself, 2011 there was a, then 2019 there was a very critical moments for the market where the market fell down drastically, and again from 2008 at least we have seen general election in 2009, 2014, 19, and now we are talking about 2024. So VIX is primarily known as volatility index. It is also called fear index. As I have been mentioning, the market is driven by greed and fear. So obviously, a prudent investor, if everybody fears, that time a prudent investor has the courage to really make some investment in the market. And if you do so, you will make a big money. Similarly, if everybody are very optimistic about the future, it will be good time to book partial profit or good time to book profit. So by just doing this discipline, one can make money. So typically, fear index is or volatility index lies between 0 and 100, because it's normally expressed in terms of probability. So basically, it will be 0 to 1, and if you talk in terms of percentages, it will be 0 to 100. So this is basically defined as sum of weighted implied volatility in the market. So basically, it's very similar to a standard deviation, but here for computation, option trades are considered. The open option position, which is out of the market, which is away from the market, they are considered, because those people speculate and they decide the direction of the market. So while computing volatility index, option trades are considered. So we are not getting into the nitty-gritties, how it is calculated and all those, because calculation is not required for us. But at the same time, we must look at the trend of volatility index, and today the VIX index for India is up by 14% in a single day. So VIX, this means market is going through a lot of volatility, and as you know, market is fallen today. While I am recording this video, I could not do it yesterday due to some preoccupation, so I'm a little late, but I'm doing it today. And this also talks about in election years why it happens, what are the general trends in election. We'll talk all this. So let's move forward. So this is the chart for the VIX index. It is the chart from 2011 till today. The green, the blue line is the Nifty, and the red one or reddish one is the VIX index. As you can see, they are not correlated. In fact, they are inversely correlated. Generally, when VIX is falling, Nifty is going up. When VIX is sort of like coming down, it is going up at the similar rate. Coming down drastically, going up in a much faster rate actually. So that's the VIX, and this is VIX and this is the index sort of. So this tells us about the direction of the general relationship between. Now you can see that some of the time, like during 2020, it picked up. It went up to the almost 80%. Here again, it dropped and went up to 60%. Today, the VIX index today is around 20.85, 89 range. It is sort of like today. So it is not abnormal. Normally, anything around 18, 20, if it is fluctuating in that range, which is this range, is normal, quite normal. Some volatility there in the market. It takes a spike. So what this spike tells us? This means, one thing which you must look at. Whenever there is uncertainty in the market, whenever there is a major event in the market, people start speculating. Like 2 months back, people are saying BJP is coming back with great majority. Today, still people believe BJP is coming back with majority, but this great majority is reducing slowly. So that is creating uncertainty in the mind of the people. Similarly, there's a mega action like COVID or something of that type, incidents, some mega international affair which impacts the market, the volatility goes up drastically. And that we need to look at. Now, let's move to the performance of Nifty in election years. Here I have got Nifty performance month-wise, January to December, and then last column talks about the overall. 2004, as you see, was the first election, and each year the election got conducted sometime in April end and May. This year also it is going whole May, but that is the timing of election. So you like 2014, four was the first election, let's say, where like Bajpayee got defeated and Congress came to power. Now this year, if you look at the annual return was around 10%, 10.68%. But 6 months before election, this is like May. So here you see it is very subdued. Like people are not sure it's going to go up, and then it's going up drastically. Now here, in order to interpret that, we have to look at the PE, price earning ratio, in the month for the same year for Nifty. So if you look at the price earning ratio for 2004, you will see in 2004 the price earning was 2021, which is very close to the median. And median, if you look at the median price earning for this one, so median P is about 20.78 or 21 roughly. So that time, before the election in 2004, the P was sort of like market was valued rightly, very close to the actual value of the market. And therefore, after even losing, if you look at after BJP losing, there was some gain, and in total, it made around 16% gain in 2004. If you look at 2009, here the P was very low. Before election, P was very low. So obviously, there was an annual gain of 22.77%. 2014, if you look at, P was sort of like little below the 21 mark. Little like market was undervalued. And therefore, after BJP won, it shot up by 21%. 21%. And 2019, when they look up, the P was quite high before election already. So therefore, later also it maintained at the same level, and it gave us a return of about 25-26%. So friends, it is very important here, in order to understand, you have to read the two charts together. So VIX, each year, but they have been volatility. Normally 6 months before election, either there is a rise of 8-10%, and after election also, there could be temporary flip, or let's say a party loses, it goes against expectation. So there would be some drop in the market in short term, but in long term, market gets aligned to the fundamentals of the market, which is the PE, let's call it. So today, when you look at 24 PE, you will see that 24 PE today we are at 21.26, whereas this is little higher than, very little higher than the median PE of the Nifty. So this means market is not overvalued. So today, before election, if there is a, like market predicts by, let's say, 5%, then market comes down by 5%. So after the election, irrespective of the result, chances of going up will be higher, because it is just valued, and anything going down becomes undervalued, and that time the chance of market to go up becomes much higher. So from these perspective, friends, VIX index, only thing it tells us, like, as the VIX index keeps on going up, you can expect a lot of volatility. So therefore, stay away from the market. And second thing I have talked is valuation is the key. Election, okay, there is volatility coming due to election, but main key is P or fundamental or valuation. So anything where valuation is very high, particularly that is what is happening is small and mid cap, which I made a separate video, book partial profit on those shares. And large cap valuation is quite reasonable. You can, as fall happens, you can keep on investing in large cap and have some money, and watch out for VIX to really shoot up, which gives you a good opportunity to put your money. And if it goes up and market falls, which chances are likely to, by let's say another 5% or so, that time is a good time to invest. You should not worry about the outcome of the result, although BJP is going to come, but even though there is a market reaction on that, numbers of seats are less. You should not worry about it, and you should go ahead and invest. That is going to give you a good return. And today market is just valued right. It is neither overvalued nor what do you call, undervalued. So for a long-term investor, investing at a right PE, investing at a good valuation is going to give you a good result. In fact, when I look back at my own portfolio, what I see is, or what I observe is, whenever I have invested in a stock which has a very high PE, like 80, 90, return was not good, very good in medium term, like 2, 3 years time frame. But whenever you have invested in a stock looking at the valuation and had gone through all the selection criteria, you make a decent return in the short term, medium term, and certainly long term. So friends, if I have to say one factor which you should look at after selection for buying is a valuation. So don't forget valuation. And for your benefit, what I've done is I've brought a set of courses which is available at drbishram.graphi.com. And there's a free course. If you complete the free course in one day, I give you a discount of 50% on the other courses, which is already discounted by 70-80%. And you can have a very attractive price for buying that course. So take this challenge, complete the free course, which is 1 hour, maybe 10 minutes in a single day. Write back to me. I'll send you a discount code. Apply that code and enroll in the total course at 50% of the already discounted price, which will be a good thing for you. And certainly it will educate you to a great extent in terms of understanding market and what you should do. So I hope you like the deliberation of today. Thank you so much for your time. Stay invested. Sit on some cash. Wait for some good time to come, which is likely to come. And remain engaged with this particular channel. Thank you so much for your time. Jai Hind, Jai Bharat.